Good morning and welcome to IG's Early Morning Call. I'm Angela Barnes. Coming up on today's programme. Australia growth hits a wall. GDP rose 0.2%, its slowest growth in a year as consumer weakness persists. The US dollar and Canadian dollar pair is in focus as traders await ADP employment data and an interest rate decision from the Bank of Canada. Also, Rio Tinto is ramping up its capital expenditure with the miner bringing forward production at its Simandou iron ore project. So we'll have more of that coming up in the show. But first of all, let's start with volatility and take a look at how the VIX is doing this morning. Well, volatility is lower on the day, currently down 0.34%. It edged up higher yesterday, but reversed those gains. That's after a month, as you can see, a much lower volatility throughout November. And now, with 30 minutes to go until European markets open, let's have a look at how things are looking across Europe. Well, the FTSE 100 is set for a marginally higher open. Yesterday, the London Stock Exchange faced two outages during the morning, hitting trading in hundreds of small cap stocks. The FTSE 100 and 250 stocks, they were unaffected by the halt, but trading was suspended in around 2,200 smaller shares, including online retailer ASOS and drinks maker Fever Tree as well. Moving on, let's have a look at France's CAC 40. That's also set for a higher open this morning, up 0.19% pre-market. And Germany's DAX as well, also following suit, set for a higher open, currently up 0.17%. Well, investors will be digesting economic activity data that came out of the Eurozone, which continued to shrink in November, despite the closely watched composite purchasing managers index rising to a 4-month high. Well, let's move on to Asia Pacific and see how things were looking overnight. Well, the Nikkei 225 closed up 2.04%. Hong Kong's Hang Seng was up 0.94%. And Australia's S&P ASX 200 also up 1.65%. Well, Australia's third quarter gross domestic product expanded more than expected. More in a moment on that. And business sentiment, meanwhile, at large Japanese firms improved in December, according to the monthly Reuters Tankan survey. Investors will also be assessing China's credit rating outlook being cut to negative from stable by Moody's yesterday. Well, let's move on to US stocks and Wall Street. And this is how the three main indices closed at the end of trading yesterday. Dow Jones Industrial Average down 0.22%. The S&P 500 also lower 0.06%. And the tech-heavy Nasdaq closed up 0.31%. Well, Apple was the best outperformer yesterday, helping mitigate its losses, but not quite enough, as you see there. Apple shares gained 2%, whilst the S&P and Dow slid on Tuesday. The Nasdaq gained, and that's as technology stocks outperformed. It came as job openings as well across the US declined, a sign that the US labour market could be weakening. More job data out as well this week. But today, investors will be keeping, and let's have a look, at the indices as well this morning, pre-market, to see how it's looking. Well, the US 500 set for a marginally higher open, pre-market up 0.2%. The Nasdaq up 0.32%, also set for a slightly higher open, and Wall Street too, 0.1%. Well, investors will be waiting for the US ADP employment report for November today and initial jobless claims tomorrow, as well as non-farm payrolls on Friday. Well, Australia's economy barely grew in the third quarter. Gross domestic product rose 0.2% quarter on quarter. The consensus was for it to be 0.4%, marking an eighth straight quarter of growth, albeit its slowest in a year. Well, as I said, this was short of forecasts of 0.4%. Meanwhile, annual GDP growth stood at 2.1%, little change from the previous quarter. The data from the Australian Bureau of Statistics showed on Wednesday. Household spending, meanwhile, was flat quarter on quarter and was barely grew for 4 quarters in a row. Its worst stretch since the global financial crisis. Now, this slowdown is seen as necessary consequence of the Reserve Bank of Australia's monetary policy tightening, and this latest data bolsters the case for the bank to no longer need to tighten. Well, if we just go over to Forex markets quickly. Let's just have a look at the Australian US dollar pair, and let's have a look here. And the pair is currently slightly higher on the day, up 0.52%. But let's move on quickly to Eurozone retail sales, because at 10 a.m. we'll have those, and the Eurozone is expected to rebound. October data is seen up 0.2% compared to September. Year on year, the index should decline by 1.1% compared to minus 2.9% the previous month. And with US economic data, well, yesterday, job openings decreased by 617,000 to 8,733 million, marking the lowest number of openings since March 2021. Well, this triggered a modest reaction on treasuries. Buyers jumped in on the release. In the details, the hires and separations data suggested that the job openings decline was unfulfilled. Openings, listings removed. Well, let's just have a look at the dollar basket this morning and see how it's performing against its peers. Excuse me. Well, in fact, the dollar basket rose by 0.3% yesterday, hitting a 2-week high, hardly reacting to the news, currently up 0.02%. Well, the real test now for the greenback could come later today. At 1:15, when ADP employment change data comes through, economists anticipate the US private sector to have created 130,000 jobs in November. Last month, private businesses added 113,000 workers, below expectations of 150,000 job creations. Well, the ADP report's track record of mimicking NFP data is lackluster at best. Last week, however, the number of job creations came in fairly close at 150,000. For this Friday's non-farm payrolls, economists expect 180,000 job creations. Unemployment rate, meanwhile, is seen as staying at 3.9%, and average hourly earnings are forecast to rise by 0.3% month on month, 4.4% year over year. Well, let's move on to economic news in Canada now. And the Bank of Canada should keep its overnight rate at 5%, leaving borrowing costs at a 22-year high. Well, the Bank of Canada last held its prime rate on October 25th, and depending on inflationary risks, the Bank of Canada has always said it would not hesitate to move rates higher. But there is very little risk at the moment. Headline CPI came in at 3.1% in October. However, inflation is expected to return to the 2% target in 2025, the central bank says, and it also expects inflation to be higher in the short term and projects inflation will average about 3.5% through the middle of 2024. Well, let's just have a look at the US dollar, Canadian dollar price chart, because investors will be keeping across how it moves the Canadian dollar after the rate decision. Against the US dollar, the pair snapped a 2-day winning streak this morning and is attracting some sellers despite the recovery of the US dollar. It's currently down 0.18% on the day. Well, the Bank of Canada interest rate decision later could, of course, trigger volatility in the market and give a clear direction for this pair going forward. Well, let's move on now to some corporate news, and we're going to be watching out for Rio Tinto at the market open. The miner has decided to bring forward the start of production from its giant Simandou iron ore project in Guinea to 2025, a year earlier than expected. Well, Simandou is set to be the world's largest and highest grade new iron ore mine. It will add around 5% to global seaborne supply when it comes online. First production is expected to ramp up over 30 months from 2025 to an annualized capacity of 60 million tons per year. Well, Rio Tinto owns 2 of 4 Simandou mining blocks as part of its Simandou joint venture with China's Chalco Iron Ore Holdings and the government of Guinea. Of these 60 million tons, Rio Tinto's share will be 27 million tons. Well, now this has a cost, however. Initial capital allocation amounts to $6.2 billion to develop the mine, rail and port infrastructure. Rio Tinto will have to ramp up capital expenditure. In 2023, the miner spent $7 billion on capex, of which $1 billion was growth. Of that, in the next 3 years, its growth capital expenditure estimate is $3 billion. in a year. And the let's just have a look at the Rio Tinto price chart. Since the start of the year, its share price has fallen by about 7%, but its share price is back around where it was in March at around 55.98. But since mid-August, however, its share price has gained about 21%. Well, moving on to oil prices now, and let's just take a look. Let's move over to commodities here and take a look at how they're doing this morning. Brent is currently up 0.36%, trading around $77 a barrel, while US crude WTI also up slightly 0.21%, trading around $72 a barrel. Well, both oil futures posted another day of losses yesterday after API inventories rose across the board. Well, crude oil stock increased by nearly 600,000 barrels. Gasoline stocks went up by 2.8 million barrels and distillates by nearly 900,000 barrels. WTI, meanwhile, just switching back to its price chart, well, it hit a 5-month low yesterday. And it seems difficult for Brent and WTI to find support lately, and markets are doubtful of the effectiveness of the OPEC plus supply cuts. Traders are also increasingly concerned by a worsening demand outlook in China. And now let's have a look at gold, because that has been making headlines as well over the last few days. And that's because it has remained above the $2,000 level, and it continues to do so, but it has fallen since it hit 2147 per ounce on Monday morning during early trading. On the day now, it's currently up 0.43%, still hovering above 2,000, of course. Now, the renewed US dollar demand has dragged the yellow metal slightly low, but it has been fueled by expectations that the US Federal Reserve will not raise interest rates further and could cut rates as early as March. Also, a gloomy picture of China's economic prospects has dampened optimism across commodities markets and created some headwinds for the gold price as well. Let's just have a quick look at silver. And that also has been following a similar trajectory to gold, but it has also reduced gains after the recent rally, and it's currently up 0.41% on the day. Well, that's all we've got time for this morning on Early Morning Call. Thank you very much for watching, and do keep across all our IG platforms for updates and market insights and analysis when we have Beat the Street this afternoon as well with Angeline Ong, and that's just ahead of the Wall Street Open.